Hey, what's going on, everybody? Your realtor Carlos Rojas here, and today on the house we have Frank, the bank, my man over here, ready to give you guys great advice when it comes to mortgages. And I'm here to, question and poke around a little bit with the questions that you guys have, that you guys ask me all the time. That way you get it directly from the bank himself right here. Frank, you want to introduce yourself a little bit to the people here?
Thank you, Carlos. Thanks for having me on the show. I'm Frank Cotto. I'm the owner of Lincoln Lending Group, a wholesale mortgage brokerage business right here in Tampa, Florida, founded in 2003. So this is our 20th year in this crazy business.
That's right. President of Lincoln Lending, guys, himself right here. And just so you guys know, I've been doing business with Frank since I became a realtor. You were pretty much my very first mortgage company to work with. And I've learned so much from you. So thank you for everything that you've done for myself and my clients.
Yeah, thank you. It was an honor.
And Frank, so let's get right into it here. So guys, this is our first episode. We plan on doing this weekly for you guys so that we could get your local news directly from the people that are actually in the business here in the real estate world in the Tampa Bay area. So if you're from outside of Tampa, you get a lot of knowledge from Frank as well. And you can also do loans with Lincoln Lending from out of state as well, right?
That's right. We can pretty much handle you nationwide for almost all of our products.
Now, if you're local, we will talk a lot about our local market here in Florida. So if you're interested in that, that's basically where we're going to focus. But outside of that, you can learn a lot on this show as well. And we are going to name this We the People, which I love. And I have a shirt here.
Man.
I know you can barely see it because I got my laptop right here, but,
And I went with my red, white, and blue theme when you told me the name of the show. I said, we got a little Lincoln shirt on here.
I like it, man. I like it.
A little Lincoln button there.
Yeah, because, we the people are pissed.
That's right, we're
rates.
pissed.
What's going on with this race today, right? So let's go right into it right now.
Sure.
So this is going to be the mortgage rates that show up as soon as you just Google it, right? And I like this because this is what most people do. They go right into Google and they say, what are the rates today?
Right.
And you see a 30-year fix for 8% here. Frank, what do you think about this as soon as you see this?
I'm speechless. To be honest, you showed this to me 10 seconds ago, and what was my reaction? Oh, my God. So okay, good and bad. If I'm a consumer and I'm Googling what the rates are right now, and I see 8.083% on a 30-year fix, which is what most people look for, right, is a 30-year fixed mortgage, okay? That's insane. And what's insane about it is not only is that a super high interest rate and scares people, and that's part of the reason that people are scared to buy right now is because they feel like the rates are so high. But what I see is BS, right? I see a farce right here because we are a wholesale mortgage brokerage business. And I'll take a quick second to explain what that means to our listeners, is that my company gets the rates at the exact same level that Fannie Mae and FHA get the rates before they send them out to their bank. So the way I explain wholesale versus retail when I do seminars is I say, okay, guys, Bank of America has like 2,000 branches across the country, right? They get the rates from the federal government, not the federal government, from the institutions that create the rates. They get the rates at corporate, and then they mark them up and they send them out to all of their 2,000 branches. And then the branch manager wants to make a commission. So what's he going to do? He's going to mark it up for the branch a little bit. And then the originator sitting in the desk, the mortgage guy, he wants to make a commission. So what's he going to do? He's going to mark it up a little bit more. That's how you go from wholesale to retail. That's why when I look at this, I know the difference. And I can see this rate and I know that this is garbage. Okay. This is what you're going to see advertised. This is what's out there. What is the current rate? I just had it pulled up 2 seconds ago. That is a conventional Fannie Mae 30-year fixed mortgage. Okay, not FHA, right? This is not FHA and VA. This is conventional. Today's conventional rate at our company is 6.875%.
Okay.
That's so when I see this, Carlos, I freak out because I'm like, this is the reason that people are not jumping out to buy, because they don't realize that there are better rates out there. But the reason you see this rate is because they're baking in cost to it. Right. And think about like anything else. If all of a sudden the price of bread drops by $2, but the retailers are selling it for $5, what are they going to do? Are they going to just drop it right away? No, they're not going to drop it until the entire market starts dropping it, right? They're just going to make more profit. That's what we're seeing right here.
So basically, if you get a pre-approval from your bank, it's worth taking a look with a company like Lincoln Lending so that you can actually understand what your numbers would be directly. That way you're not giving away your money to people that are basically charging you a higher rate when they don't need to.
Yeah, and let me give us a piece of advice. There's major things. Number one is don't ever pay to get an estimate. Ever. Don't ever pay an application fee.
So there's people out there that are charged to get.
Oh, yeah. Okay. They're still out there. I just heard this. It was a small bank. I don't want to name their name, but they charged a $4.95 application fee. That's a junk fee. That's just a fee to get you to pay something so you don't go shopping around, right? The other piece of advice I'll give you is if you're going to shop around, you do not have to complete a full application to get an estimate. All right. There's no law that says you have to do that. However, most banks and financial institutions, when you call them and say, hey, I would like to get a competing estimate, I've got something from somebody else, they're going to ask for an application because they're going to want to tie you to the bank. They're going to make you put your credit in there, run your credit again, look at your income, do all these steps. You don't have to do that. So Lincoln Lending, one thing that sets us apart is we advertise that, Carlos. As you know, for your clients, we tell them, give us the estimate from the other lender. And we don't need an app. Just tell us what credit score those guys got. I don't need to run your credit again.
Yeah.
We're going to give you an estimate.
What about, you just mentioned fees, junk fees. Is there any fees that people have to worry about when it comes to your company or just be honest?
Okay, I'm going to be very blunt. And we're going to talk, let's kind of educate the consumer on this, right? So fees and rates are directly related, all right?
And when you answer this question, can you also include maybe a percentage that people, would have to calculate in terms of closing costs?
Sure, absolutely.
And remember, guys, there's down payment and there's closing costs. It seems like a lot of buyers out there get those two confused. They want to know what their down payment is.
Yep.
And, they're thinking that the closing cost is included in that. If you're only talking about down payment, we're talking about the minimum that you may need or how much you want to put down. But when it comes to closing costs, it's the fees that you get, from your lending officer, as well as your insurance for a year,
your taxes,
and your title fees.
Right. So big difference.
What do people need to calculate for that, and what fees do they need to account for if they're using a company like Lincoln Lending?
So I'll do it kind of backwards since we started with the closing costs. So down payment, like Carlos said, generally your lowest down payment you're going to see advertised is going to be 3% down. That's a conventional loan program. Then the next lowest is 3.5%. That's FHA.
That's right.
Then somebody here about 5%. But most products you can get 3% down. Later in the show, we'll talk about some specialty products where you can do no money down. You can get down payment assistance. You can do 1%. But we'll just talk about kind of what's industry standard right now. Let's say 3%. Right. Okay. And then you asked about how much are closing costs. Well, closing cost, I'd like to tell people a percentage, but when you say a percentage, it's very dependent on the loan amount. I think a good number, if you want to be safe, on your average $300,000 to $400,000 purchase is probably 3% in closing cost. So 3% down payment, 3% in closing cost. Good number to have when you're ready to buy a house, 6%.
Exactly.
All right.
Okay.
Good baseline. Now you're buying an $800,000 house. We're not going to charge you 3%, 18 or 24,000 in closing costs. You know what I mean? It's probably going to be more like 2%. But you're buying a $200,000 house, it'll probably be 3%. You follow me? All right, so let's talk about these rates. So the rates and the cost and how it's related. So I just told you that today's 30-year fixed at Lincoln Lending Group, what did I say it is? 6.875. But on here on Google, it says 8%.
Yeah.
Right? So here's the difference. If I was to give a client 6.875% today, I would charge them something to give them that rate. All right. I would likely charge them a point. Right. And what is a point, guys? A point is 1% of whatever you borrow. So if you're borrowing $400,000, 1 point is $4,000. That's a closing cost. All right. Just like Carlos said, taxes, insurance, underwriting. A question I'll jump back to is, what about junk fees? What do you watch out for? Any fee that is not directly buying down your interest rate is a junk fee. All right. An underwriting fee, an admin fee, an origination fee. Okay. Unless it's a discount fee.
It doesn't get any more simpler than that.
It does not.
Anything that is not a buy down fee
is pretty much a junk fee. Now, a lot of banks and brokerages charge set fees. They already have like $16.95. That's just their fee. I'm not calling them, they're not bad guys.
Right.
That's
right.
just their business model.
Right. And if you enjoy working with those people, that's what they charge.
Sure. If you enjoy paying more, go work. If you enjoy getting less service, don't work with Carlos. Right? But we know that's not real. But so talking about how these fees relate to your rate. So on the screen, you had 8%. We're at 6.875% today. How are we at 6.875? Because we're a wholesale lender. Simple. I don't mark the fees up before I give them to my team. So my team, now I could give somebody 6.875. Again, I'm going to charge them a point. But here's an interesting scenario. If I gave them 7.5 or 7.375, I'm giving them a rate half a point more than the market rate. So what does that mean? That means my company gets a commission. Why do I not have to charge people fees and points and junk fees? Because we can just manipulate the rate to make a commission from our servicer, right?
Got it.
It's so I can choose a rate that's lower than what the market rate is. And by the way, I guarantee that 8% rate, I guarantee that bank is charging fees.
Yeah.
So they're going and giving you 8%, they're charging fees. We could do 7.5 and not charge fees. Or you want 6.875, we'll give you 6.875 and you pay a fee. Big question. You're probably going to ask this later, but I'm just going to spew it out since I'm on a roll. Big question is rates, and what should you do right now with rates? Because they are still higher. Although I love your chart because it also tells us the 30-year fixed average over the last 40 years is 7.25.
Wow.
Last 40 years of mortgages, 7.25 is your average 30-year fixed rate.
Yeah. Which means we're at the normal.
Thank you. Thank you. Exactly. We're not in a bad spot. Now we are spoiled. You know, especially young guys like you and me.
We've been spoiled in the last 5 years, 6 years, right?
Like even longer sometimes, right? But definitely in the last 5-6 years. I mean, these rates in the 2s and 3s, I don't know if that's coming back. But when it comes to buying points, I'm going to give a piece of advice to everybody listening right now is I don't think you should pay a lot for points right now. And here's the reason. Okay, there's your historical 30-year mortgage. I don't think you should pay a lot for points because I think most of us believe rates are going to come down in the next year or two. I personally think they're coming down next year because of why?
Election year,
That's right.
What? Okay, so before we get into that conversation, because I definitely want to have that conversation. Why? What is the rates in terms of like who decides? I know it's the feds, right?
Yeah.
Who are the feds? Who controls them? Okay, why are they high now compared to the previous years? Does it have anything to do with politics? Is it the war? You know, what exactly is it? The United States is in debt. Is it what they're feeding us through the news, basically? Is that it?
Yeah, it's a game. Okay. All right. So the probably the best thing I can explain to people is when you hear on TV that the rate just went up. A lot of times they're not talking about this. They're not talking about the 30-year fixed rate that you and I are looking at.
Okay.
By the way, I need to deviate to something real quick.
Go ahead.
I told you the conventional rates are 6.875. FHA and VA are around 6% right now.
Oh wow, that's great.
6%. That's 2%. That's 20% lower than what's on that screen.
I've been telling people. I've been telling because I just went through this right now, guys. I've been a realtor for 5 years, okay, and I fight for this. This has been my number one job. I was able to get my wife out of work with this, okay, and I fight, I hustle, just like Mr. Frank over here. And I remember what it was like in 2020 and 2021. And I had a lot of people that were not happy offering $20,000, $30,000 over asking price and still losing the deal, right?
Right.
So in this case right now, I have houses that are dropping $30,000, $40,000, $50,000, right? So the prices are down. And on top of that, you have situations where I'm getting closing costs as well for the buyer. So it's a very unique situation right now. It seems like it just started in the past, 2-3 months. So it's an amazing opportunity to buy in my eyes as a realtor. I'm taking advantage of this myself. I'm buying a house myself, a second property myself. So it's a unique opportunity. Do not wait for the rates to go back down when the prices are historically
this is the best time to buy.
Right.
End of story. And you kind of went quickly on something where you said sellers are giving concessions and stuff. this is the time because sellers are willing to negotiate right
That's
now
right.
because you don't have a line of buyers at your house. If you guys remember during COVID, and I know you remember,
Yeah.
people were buying houses sight unseen.
Yeah.
Okay. And they're paying 20, 30, 50, 100,000 over asking price. The seller's not giving you concessions when you're buying sight unseen and he has a list of buyers. Right now, he doesn't have a list of buyers. So you can negotiate better. My favorite phrase, marry the house, date the rate.
That's right.
Guess what? You can't get your money back when you overpay for a house, but you can lower your interest rate by refinancing and dropping it. So let me go back to the question real quick because I totally brushed over what you're saying.
And that happens,
We like to give education, so we're just going to throw
That's
it out
the
when we
best way
can.
to understand it.
It is scenarios. That's why I like to explain to you. You got to have examples. So you ask where the rates come from, how's it work? Everybody sees on TV. You see, hey, the prime rate went up. The Fed raised the rate. When you hear that, do not freak out. That is not the 30-year fixed rate. That is not the 15-year. That is not the FHA or VA. That is called the prime rate. What does that affect? It does not change the long-term rates. They are not directly correlated. What it changes is adjustable rates. Your home equity line of credit, if you have a second mortgage equity line, it's usually based on the prime rate. So if that goes up, then your second mortgage rate goes up, okay? The other thing it affects are credit cards. If you have a credit card and it's based on the prime rate, which most of them are, a lot of them are, and you're paying 15% and they raise it by a quarter, now you're paying 15.25%, okay? The prime rate right now is at 8.5%. It's about as high as it's been in my 25-year career.
Right. I think the last time it was 93 that it was.
Yeah, before I was in mortgages. Exactly. Now, what we are expecting to happen is rates drop considerably next year. Nobody has a crystal ball, but we can look at history, Carlos, and we can see that every single election year, a couple things happen.
Yeah.
Rates go down, gas prices go down, and we're told everything's amazing and we should vote for the current administration.
Right. Which I hope you guys don't do.
Listen, I'm glad you said that because me neither. And
Listen, this is not a politics show, but if you want a better America, I recommend you go the other side. I'm just saying.
It's not politics. This is called common sense.
Yes.
Okay.
Yes. At this point, right?
I don't like the price of eggs.
Yeah.
I don't like the price of rates. I don't like the price of gas.
anything right now.
Nothing.
Everything just seems different than. I mean, and I've been in this country since 1999.
Right.
And it just feels a little bit different this time around.
Thank you. And you came from what we got away from. And do you kind of feel like it seems like it's almost going back that way?
Yeah, I mean, it's going to take years, right?
Yeah.
I mean, I came from Cuba, and Cuba was communist for 50 years before I left it.
Right.
Maybe 40 years. Yeah, 40 years before I left it. And you can see what happened 40 years after. Because at the beginning, Cuba was,
rich,
one of
beautiful.
one of the best countries in the world, top 10 at least.
Yeah, and right here off our coast.
Right.
We should be vacationing there.
Right.
Okay.
I
Can
agree.
somebody fix this problem?
Yeah, I wish.
Maybe our next administration.
Maybe one day in the future I'll get into that. Actually, I have aspirations.
I would be there, right there with you, my man. So,
but basically, yes, it does feel like some of the policies that they're adding right now do seem to be more towards communist in terms of what's going on with government control.
Right.
Anytime that you it's as simple as if the government wants to be involved, whatever topic you want to call it, it's more towards communism. Versus, not being involved, giving you the freedom to run your own business.
Didn't we, was it the Revolutionary War that we fought and to get away from control of another government?
Right.
It's like 200 years later, we forgot all about that.
That's right.
But anyway, so the rates, they come, the federal government, you don't want to say they set the rates. They don't really set the rates. Believe it or not, the Fed has nothing to do with the federal government. That's a whole nother podcast that Carlos and I could do. But I would encourage you guys to just Google the history of the Federal Reserve. I promise you will not leave your computer for 2 hours if you Google that.
Oh, wow.
It will blow your mind.
I'm going to do that myself.
Oh, listen, do it. You're going to call me later. I promise. And you and I will talk for an hour because it will blow your mind what really happened with the Federal Reserve. And I'm not going to get into that now because that's a whole conspiracy show, but it's real. But no, so this private organization called the Federal Reserve has something to do with how the interest rates are set. But it's Fannie Mae and FHA and VA that actually establish the rates. And how they do it is they're actually borrowing money, right, from the Fed in a way. They're borrowing money or they're selling money to private institutions, and they're borrowing at one price. They're raising the rate and then selling at another price, right? So it's all capitalism. So these rates get manipulated based on the economy. And you said the word war. Very interesting. War usually drives rates down, right?
How?
Uncertainty.
Because the way I think about it as a consumer
Mm-hmm.
myself is, okay, war is happening, which means the United States has to spend more money in the wars.
Mm-hmm.
So aren't we gaining more debt?
Yeah. Oh, yeah. Oh, yeah. Oh, here's the funny part
Which
about
to
America.
me, more debt means higher interest rates.
You would think.
Do those click together at all?
No. Because China owns most of our debt. So we pay countries interest on our debt. We pay other entities interest on our debt. We literally borrow. So when you hear about we owe $3 trillion, it's ridiculous that we owe $3 trillion. We could not be in debt. But our government, you never, it's like anything else. Once you drive a Ferrari, you don't want to sell the Ferrari and drive a Toyota.
Right.
You end up buying another Ferrari.
Yeah, that's
and,
happening.
and then
to
a
me
nicer
right now.
Ferrari. It's happening to you right
It's like
now.
I just gotta work harder to pay this car.
Yeah, okay. That's how we should think, and that's how you and I think.
Yeah,
That's not
it's-
how our government thinks. Our government just says, oh, no. We're just going to keep spending. We're not going to actually stop spending on everything because we're used to driving the Ferrari, so we don't want to step back. But you and I in the households that we maintain, we realize that either we have to work harder to drive the Ferrari,
Right.
or we have to sell the Ferrari.
Right.
Our government doesn't work like that. That's what's terrible.
By the way, I don't have a Ferrari, but I really want one in the future. You know, just
You have a very
just
nice
putting it
truck.
out
What are you
there.
talking about?
Yeah, I love my truck.
Dude, the price of trucks, you could basically get a Ferrari
Yeah,
these
kind
days.
of,
I
yeah.
mean, they're approaching, some of these trucks are $100,000,
Yeah,
man. It's
yeah.
like, my
That's
God.
true, man.
Anyway,
Yeah. So so let's take a look here at the historical, rates right here. And what I'm looking at here is basically, I see something crazy that happened in 1980. What do you know about that? Because it looks like it almost touched 20% for mortgages.
they did. So that was what's called the savings and loans scandal. Basically, it was a tumultuous time in our banking history where there was a lot of uncertainty in what was happening, and our mortgage industry was called savings and loans, and they were part kind of their own entity where they created the mortgage markets. And from what I understand, they basically were getting manipulated, and there was all this fraud and whatnot going on. So that's kind of where it all changed, and then banks started offering mortgages, and then there were mortgage companies. So if you ever, for example, the first guy I ever worked for was Paul Urbanski, great guy, still here in Tampa. He owned a company called Avail Mortgage. He founded that company during savings and loans. That's when mortgage companies started popping up, and that's where everything changed. And you can see things got really good after that. You see, after they got rid of the savings and loans banks and things were just handled by the FDIC institutions, you can see rates started dropping. What did we go down to?
Yeah, it looks like in 2000 we went all the way down to about 5%.
Yeah.
And then in the
So that was the
after
refi
2010, right?
That right there, if you look at the 1990s, how we peaked at about 10%, right in what is that, 95, a little bit to the right, like 95,
Okay.
97. I got in the business right in 2000, or right after 2000.
Okay.
And I'll never forget the first refinance I ever did was this wonderful lady named Patty. Okay, sweet. I'll never forget her name. And she had a rate of 7.875. And I refinanced her at a rate of 6.625.
Okay.
And she cried at the table. It was like a very emotional experience for me. It was my first mortgage transaction. The lady's crying. And I'm like, my God, this is how this business is. Like,
Let me tell you, I've seen that so many times.
Right.
So many times. And people will cry for one of two reasons. One, they're either really happy
yeah.
or they got really screwed over.
Right. We like
And-
the first one.
Yeah. We do not want people crying for the other reason. Definitely, there's a beautiful part to this business if you handle customers right, if you take care of them
Yep.
correctly, and they're happy at the end. If you educate them correctly, because that's my biggest thing. I want to teach them how things work so that they're not, oh, Carlos told me. No, I learned these things, right?
Yeah.
And
It's
then
an
from there
educational
on-
experience.
Right. At the end, I've seen so many people cry at the closing table.
It's also that when they cry, it shows you that this truly is the biggest financial
Right.
transaction of their life.
Right, and to something that you said earlier,
Mm-hmm.
you mentioned that it's a game, right? The rate is a game. Buying a home is not a game.
No.
We're talking about your house, the one that you're gonna live on for the rest of your life. And if it's not that, then it's gonna be an investment, right?
100%.
And I always tell people, listen, no matter what you do with your life, where you spend your money, you want to put money into real estate.
Absolutely.
Especially here in the United States. I don't know about outside of the United States because For example, if you buy a house in Cuba, you're probably going to lose it to the government.
You never owned it anyway.
Right. But if you're in the United States, even Puerto Rico or islands or places that are owned by the United States, if you buy a house in the United States, historically, you're going to gain value on that house, first off. If you used a loan or if you didn't, it doesn't matter. Either way, it's going to gain value. You're going to have equity sitting there, which is better than the money sitting in the bank. Oops.
Right. Almost dropped my thing. So, I like to say this. 99% of people on this planet, not just in this country, have to pay to live somewhere. Right. So why not invest in yourself?
Right.
If you're paying rent right now, you're still paying a mortgage. You're
right.
just not paying your mortgage. You're paying the landlord. Actually, Carlos would like you to pay his mortgage. So go ahead and rent.
Yeah, exactly.
I mean, us property owners, we look at it both ways, but we still encourage people, even people who have rented my properties, I encourage them, if I ever want to sell, I want to go to them first. I want to make them the homeowner. I want you to invest in yourself.
It works like this. We're in the business of making people richer.
Right.
Because the more that our circle of people that we know have more money, the more business we get ourselves as well.
Of course.
So it's a beautiful thing when we do the type of businesses that enrich people, right? So to me, I educate people on just creating a real estate portfolio. Buy your first house, which is yours, right? You're gonna live there. If you don't want to live there, you can rent it out and live somewhere else. It doesn't matter whether you're gonna be traveling or not. It surprises me that one of the richest men in the world, Elon Musk, does not own a home.
So I think when you get to the billionaire level,
I guess you don't need to, right?
he already owns the country, Carlos.
Right. I guess to me, I would buy half of America if I had that amount of money.
I think he owns Mars. So
Yeah,
I think
that's true.
He's got rockets. I mean, you got rockets, you don't need a house.
That makes sense.
So the whole thing though about actually, let me say this because you said investor, and let's talk about investors really quick. Everybody, when you buy a house, you're essentially investor. You're an investor. You're investing in yourself.
That's right.
Right. But let's say you actually want to have a real estate portfolio, like Carlos is saying.
Yeah.
But you don't have a lot of money. But this is really where you want to go. Guys, there's an awesome new product. I don't know if you knew about this.
No.
There's a new product
enlighten us.
that just came out, okay? It is an FHA loan. It's a government loan. Okay. You can buy a duplex now with no money down. We have a 100% financing duplex loan.
Get out of here.
Yeah.
No money down?
You know where I'm going with this, right? So no money down. You just got to pay your closing costs, but Carlos is going to negotiate with the seller in this awesome market for you as a buyer to cover the closing costs. So you can literally get into a property maybe for an appraisal and a home inspection, maybe $1,000 or $2,000, right? You're buying a duplex. You're going to live in one of the two units. What are you going to do with the other one?
You got to live for a year.
Yeah, you do. But what do you do with the other one?
You rent it out.
So what are you immediately? An investor.
That's right.
You now own a rental property. It's also your primary. Carlos just said the important part to build your portfolio is you have to live in one of the units for 1 year. After 1 year, you can move out. And what's Carlos going to do? He's going to help you find another one.
That's right. And for the second one, how does the second one work?
Same thing.
Down payment?
Another 100% loan, man.
No way.
Yes.
How long has this program been out?
About a month.
Oh,
yep.
wow.
It's about 30 days old.
Dude, if it comes out like that, does it expire?
This one is actually an FHA endorsed loan, so it is not like a down payment assistance program. It's not a fad. It's an actual product. So could they change the rules
for a while?
It could be here forever.
That's awesome.
Now another interesting thing they just did. So Fannie Mae did something to also help since FHA, because right now the government understands that prices are high and rates are high. So they are trying to create programs to create more affordability for both buyers and investors.
Nice.
Prior to a month ago, Fannie Mae, if you were trying to buy a triplex or quadplex, a 3 or 4 unit property, required 25% down payment. They just lowered it to 5% down. Oh, wow. Same rule. Got to live in one for a year. Then you move out and you buy another one. So go figure. You buy a 4-unit property with Carlos. You live in one. Now you have 3 rental units. Then a year later, you buy another 4-unit and you live in one. You have 7 rental units.
Guys, listen, I have a rule for my clients. Buy 1 house a year if you can, if you're able to. Mm-hmm. And that just, that sparked everything in my brain. Right?
Yeah.
So basically what you're saying is that you can start your real estate investment as early as you possibly can. I mean, you live in a country that you can. Okay, so for those young people that are close-minded, that are thinking, oh, I can't even get a house in today's. No, you totally can. I did it with McDonald's. Okay, I was a GM for McDonald's, and I worked my way up, and I was 21 years old, and I bought a freaking house at 21 years old in New Tampa that eventually gave me almost $200,000 of a profit when I sold it, and that was 10 years later. But that's besides the point. The point is that you can do it. You just need to focus. You need 2 years of employment history.
No, you don't even need 2 years of employment history.
Bro, what is this, bro?
So-
He's joking around or what?
No. He's like, I love that. See, we didn't even go over this part because now we're getting the surprise.
What are the requirements for this?
So-
and this was not even planned. This just came on the table, so you're hearing it here first.
So
Go ahead.
so an FHA has a rule that you have to have 2 years of employment over your lifetime. Okay, so you could have worked for a year out of college, you could have had a baby, not worked for 8 years, then worked another year, and now you're good. Fannie Mae has no requirement.
Oh, wow.
You can, and people also ask me, how long do you have to be on your job to qualify for a loan? We just closed a loan 3 months ago for a lady who moved from New York to Tampa, and she closed with an offer letter. That's all she had. As long as the offer letter from the new employer says your start date is within 30 days and it's a guaranteed offer letter, you can close with that on Fannie Mae loans.
Wow. And this is just for the multi? Or
No, this is
can
for
do this on
all
regular
Fannie Mae
FHA too?
loans and regular FHA. You never need more than a day on the job, all right, for any program. The only time that you have to have a longer history is when you are self-employed. If you're self-employed, you generally need 2 years filed tax returns because self-employed guys like Carlos and I, good year, bad year, we can write expenses off. Yeah, that bank has to see that you have a 2-year average of a certain amount of income in order to give that to you as qualified income.
That's right. Man, that's great info. I really like that right there. So, and just so that I can talk to my Cuban people over here, stop buying houses and converting efficiencies and doing all this illegal stuff. Do it the right way, the legal way.
Yeah.
That way, you don't get in trouble with the city. You don't do the stupid things.
Permitting.
And you're actually doing something where you can grow this real estate portfolio. Man, this sounds great.
Yeah, it's great. And by the way, you can go, I just got a new website, Carlos. If you guys want to find out what works for you, it's very easy. Contact frankthebank.com.
Contact
frankthebank.com.
That's perfect.
That's very easy. And it'll bring you to a little form. You put some basic info, and then Frank the Bank's going to call you and go over your exact situation. Don't be scared. That's some other advice I'll give you guys is just because one company or bank or person or mom or dad said, no, you can't do that. That doesn't work. Look, I just surprised Carlos with stuff, and he's been in the industry for half a decade, and he didn't know.
In this business, I learn something new every day.
Yeah.
You just got to get out there. It's this business is amazing for anybody that wants to be a realtor. This business is great, but it is a hustle. You got to be out there and you got to work your ass off. It's not anything that just business just pops out of nowhere.
No.
Maybe in 2020 it did.
Yeah.
But in today's world, you got to hustle. You got to find it, and
But in 2020, people were overpaying for houses. Right now, guys, it's the best time to buy.
Absolutely.
I'm gonna let me throw out something. Everybody asks me. This is probably the most popular question I get asked by real estate professionals and clients alone. And actually, it's more of a scenario. People go to you, or you go to them and say, "Hey, you should buy this house," and they say to you, "Oh, Carlos, I'm gonna wait till next year because I think prices are gonna drop." And you're like, why is that going to happen? And you're like, oh, there's going to be foreclosures. We're going to go through a recession. You hear all this doom and gloom.
I've been hearing it since I became a realtor.
Exactly. Right?
Yeah.
So I'm going to give you some math right now, especially if you're a realtor in this industry or you're a buyer. Follow me on this math really quick.
Okay.
There's not going to be a foreclosure crisis. Remember, I've been in business 24 years, okay? I lived through the 2008 collapse and whatever they call it. Nothing.
Can you give education to the people on what happened in 2008, like a brief?
Yeah, absolutely, because this is going to lead right into what I'm about to say. So in 2006, 7, in the beginning of 8, lenders, servicers, whatever, were putting out products for 100% financing, kind of like we said now, but they were not requiring good credit and they were not requiring income. All right. So if you have no skin in the game, you don't prove your income, you don't prove your credit, we were lending to the wrong people. All right.
I know this to be true personally because my dad got a loan to buy a house within 3 months of being in this country.
So it just comes
that's
to the country.
crazy. I mean, compared to now, like right now, to get a loan, man,
Yeah.
you got to go through a process.
Okay, so that's a perfect segue. So in the last, because of that crisis and how we extended loans to people who shouldn't have had them, and we did not ask for skin in the game, even with the worst of situations, or like Carlos' dad, I'm sure he didn't have a bad situation, but he had no history, right?
Right.
So we made mistakes. In the last 12, 13 years, since 2010 when we recovered, the lending practices have been harder than they ever have in history. Like Carlos said, it's hard to get a loan now. So follow me on the math. Here we come. We know the loans on the books right now are better than they ever have been because it was harder to get them.
Okay.
Right? So they're better loans. People have had to put skin in the game. All right. So that's equity right away. You have to put a down payment. That's equity in the house. Okay. And you're less likely to walk away from a house when you have come out of pocket $10, $20, $30, $50,000 of your hard-earned money. But here's the math. A year and a half ago is where the stat came from. So I can promise you the stat is even better today. I got this from Tony Robbins in person. All right. I was in Michigan at a private event. I'm not a big rah-rah walk on fire guy, but I went up there with the owner, actually the owner of the Phoenix Suns, who also owns United Wholesale Mortgage, the biggest wholesale mortgage company in the country.
Wow, guys, this is big right
This
here.
is
Pay
crazy.
attention.
I'm in the room with him,
Okay.
Tony Robbins, and a bunch of other, rich mofos. All right. So, and we ask about the pending foreclosure crisis. And Tony's good friends with Warren Buffett and some of these other guys. And he says, listen, I'm going to give you stats as to why it's not happening. Here's the stat. At that time, all of the mortgaged homes in this country, the ones with mortgages, had mortgages totaling about $9 trillion. Okay, that was our overall mortgage debt. Those same houses, Carlos, not including all the free and clear houses with no mortgages that people inherited and all that, just the ones with mortgages, at that time had 27 trillion of equity.
Okay.
Do you remember our timetables when we were a kid? 9 times 3 is 27.
Yeah.
So that means the mortgaged homes in this country had 3 times the equity than they did the mortgage.
Okay.
And that stat was a year and a half ago. What's happened in the last year with values?
It's gone up.
Like at least
So that means
10%, right?
Right.
So that means we more like have 3.5 times the equity.
Which means, if I can answer for
Please.
you, instead of going into foreclosures, people would just sell their homes,
Bingo.
right?
Bingo.
So there shouldn't be a foreclosure case.
There will not. Now,
There's your answer.
There's your answer, people. Now, that's a national stat. Guess where we live?
In Florida. Beautiful, sunny Florida.
That's right. Come on to Florida.
The state of the free.
The home of the brave. State of the free because of the brave.
That's right.
No, seriously, though, I wouldn't say we live in a bubble, but we are where everybody's coming.
That's right.
Our stats are way better than the national stats.
Yeah.
So do not wait. There's not going to be a crisis. It's going to be my opinion, this is an opinion, it's going to be the opposite. When the rates drop into the 5s, which they will. I mean, hell, my government rate right now, I could get you 5.875. You could pay about 1.5 points, and I could get you 5.875 right now on a government FHA or VA loan. When those rates across the board drop into the mid 5s, and the media talks about it, that's the key. You just saw what was on the screen that you showed. Right. That's your media right there, telling you rates are 8%. They're not, number one. If they would advertise they're in the high 6s, don't you think you would be busier right now?
Yeah.
I'd be losing my mind. When they hit the mid 5s, watch out. The sellers are coming out. The buyers are coming out. Then there's competition. What's that going to do? Prices are going up. That's my opinion.
I couldn't agree more, honestly. I mean, I don't know the mortgage business the way you do. And I'll be quiet in that area and let you talk all about that because you definitely have more experience and more people that you've met in your life. And you are in the business, which is the most important thing, right? But I do know for a fact that things are very different than 2008. This is not the same situation.
No.
And I mean, that math that you explained right there is clear as day to me. Why would we go into a bunch of foreclosures and the market will completely crash if there's so much equity in the homes of people right now? And if they're desperate, which is what creates this issues, is desperate sales. If there is desperate sales, and instead of people losing the houses to the bank, they decide to sell it.
Yep.
Why would there be a foreclosure issue or something that would be huge?
We had a guy call our office yesterday who was in foreclosure for a whole nother reason. Things happen. He went overseas. He couldn't make his payment. His mother was sick in Indonesia. Blah blah blah. He came back. My originator talked to him and he goes, "Oh, this guy, it's going to be hard for him to refi." I said, "Listen, tell the guy I'll buy his house for $100,000 under market value right now. Okay. Or we'll give him a private money loan and refi. He pays a higher interest rate for a year and then he refis into a conventional loan. Because he has equity.
Yeah.
He's not going to get foreclosed.
And
on.
that's the thing. This is why you gotta be a homeowner. Right. It gives you options.
Yeah. He's going to make $200,000.
You cannot have options when you're renting. It's impossible. Your only option is you keep on paying what they're asking you for, or you move to another unit. There's no options. When you're a homeowner, it gives you options. If you want a bigger home, you could use the equity of your house as a down payment. You can move up in the ladder of capitalism, of business. If you're doing great in your job, good. If you're not, if you're staying around the same, like if they're paying you the same thing as when you started because you don't get no promotions, you could grow your real estate portfolio at the same time with that. You just have to know how to manage your money and where to put it. So don't put it in parties. Don't put it in things that you shouldn't be putting it at.
No
like
Ferraris.
Don't get a brand new car if you don't deserve it. Like earn it. Like get there first with your business, like your household or whatever your job is, and then start making those big purchases once you're ready. But I'm a big believer that if you're going to pay $1,000 for a car a month, you might as well create a situation that's going to give you that $1,000.
Oh my God.
Right.
Exactly.
So get yourself into a home like the multi-unit.
Right.
Get yourself paid. If you're not making $1,000 a month off of that, do not take it away from what you already are earning, which is your job, because you're automatically going to become a slave of the system of that 8 to 5. Right. So
the system was built for that, by the way, guys.
Right. So if you want that financial freedom, the way to start for me is using that system to pay yourself back, putting your money in the right places. And to me, this is not, Bitcoin. This is not, the trades or whatever.
Stocks.
Stocks.
No.
Listen, there's a business about that and there's schooling about that. I don't know shit about that. I really don't. So I cannot educate anybody on those things, and I'm big on diversify your money.
Well, I'll tell you this: I've lost way more money in the stock market than I ever have in real estate. Knock on wood, ever. End of story.
Yeah, to me, real estate is where the game is. Yeah, guys. With that, we're gonna conclude this episode. We have a lot more to talk about, but we want to save some for episode 2. If you guys are liking this information, please comment, please share, please make sure you show some love. This is Frank the Bank, Carlos Rojas here. Please comment if you have questions personally that pertain to you that you want us to talk about in the next show, or anything that you guys want us to talk about, because this is just as much yours as it is ours, right, Frank?
Thank you, Carlos, for having me on. It was absolutely amazing. By the way, guys, we don't charge anything for applications, so you call Carlos, and we'll get you taken care of and charge.
Don't leave me hanging, my man.
Oh, man, I didn't see you there. Yeah.
Take care, guys.
Thank you.
Much love.